Everyone, Carla here from My Blockchain Island. I know it's been a while since you've seen me or heard from me. Sorry about that, but I've been studying. It's been real good. And a product of my studies is actually this keynote that I was able to deliver in Stockholm at Sthlm Fintech Week this week, actually. And I thought that maybe it would be nice to share the keynote with you guys. So let's jump in, shall we? So the topic was regulatory boundaries and if they're stifling growth and innovation. In summer 2017, I was brought in as part of the general public. It was an open session that was held at the Malta Stock Exchange. And the session was conducted by a man named Steve Tendon, who's been highly influential on the island. In fact, he termed the blockchain island. So thank you, Steve. And basically, the session was a collaborative event where people, many of the people in the audience were lawyers, but there were other people who were involved in the blockchain and crypto space sitting in the audience. And the objective was to go through one of the consultation papers and discuss and highlight attributes of the paper that related to individuals. At the time, I was in my CEO role at a VC, so I looked at it very much from an innovation perspective. And I remember that one of the key highlighted things that I had said during that session was just like, please do not hinder innovation by over-regulating. So if we look at a way a regulator has gone into the market and kind of stated their position in maybe a less audience-concentric kind of way, I would probably refer to the Office of the Attorney General in New York. In April 2018, they came out with a Virtual Markets Integrity Initiative report. Well, they started the research in April. The report came out in September. And they targeted 13 exchanges and they sent them a 34-question questionnaire asking for these exchanges to deliver their feedback and their approach to the crypto market and around regulation in the market to back to the authority within 2 weeks. This did not go down so well. In fact, Jesse Powell, the CEO of Kraken, referred to the OAG as an over-possessive ex-girlfriend. And the highlighting point here is not to criticize per se the Office of the Attorney General or what their intent was behind the report, more so the way they approached people, and specifically founders who are trying to move and shape their businesses within a very new space that isn't technically, written in the law. So another founder who did not participate in this research was CZ of Binance, and rather than commenting directly on the report, in an interview with Laura Shin on her podcast Unchained, he highlighted that they found it much easier to work with smaller countries. And I mean, unless you've been living under a rock, you will know that one of those countries is Malta. And Malta was very much focused on listening to people, not just people like myself from an investor perspective at that time, but also founders were coming to the island, were having dialogue with the regulator, not always directly with regulators, sometimes with lawyers on the island who have been an integral part of building out the regulation that exists on the island today. Okay, so let's jump into Malta then and hashtag blockchain island. So Malta had actually been reviewing and discussing the DLT and VC, a virtual currency positioning for over 3 years. I actually was part of maybe the tail end of it, and honestly, my contributions were absolutely nothing, so I'm not an expert on this law, neither am I a lawyer, disclaimer. However, in March 2018, they drafted a framework And this was then produced and put out there for further consultation. It was in November, actually the 1st of November, at the Malta Blockchain Summit, where we happily announced that the law had been implemented. And now the state of the island is that many of the VFA agents have been certified, and these companies or partnerships have been set up in a way to help companies come and apply to the regulatory body. So in order to get certification under the regulation in Malta, you have to go through a VFA agent, a certified VFA agent, and we can talk about that in another episode. If that's of interest, just ping me. So the whole point here is that what sits on our table today from a regulation perspective in Malta is the result of lots of consultations, lots of discussions. And a little anecdote here for you is that I actually, during the period of March, just after March, I had people and friends in the crypto space commenting and saying, Carla, I've been reading the proposal. I don't like this or I don't like that. And I'm happy to say that the MFSA, which is the Financial Service Authority here in Malta, we're highly responsive to these individuals and remain so. So when it comes to regulation and innovation, my position is that of a pragmatic philosopher. On one side, I want to be leaning towards go DAOs and decentralized, ungoverned, and the whole position that a lot of Bitcoin maximalists present. However, with my feet back on the ground, I think I consider myself too pragmatic to take just a pure philosophical approach. So that's why I kind of said, I'm a pragmatic philosopher, because in my opinion, I'm very much aligned with the whole "in crypto we trust." I also have a strong belief in terms of code. A lot of what we do today is very much driven by awesome development, go devs. But I also believe that we must comply by law. So in crypto we trust, in law we trust, but in law we must. And that resonates highly in my mind when I think about the innovation and regulation landscape. That said, nothing exists in isolation. Okay, so when we look at blockchain as technology, blockchain doesn't just exist as blockchain. Blockchain is being applied to every single sector that we know today. So I think that we need to look at the orienting sector and then move outwards and define how law could be applied within that framework upon the technology that associates to that sector and to the blockchain part of that. So if we look at the sector of financial services, then we'd understand that there's banking, there's remittance, there's payments, there's loans, exchanges, and funds. A lot of these sectors, all of these sectors, have their own stipulated regulation. So I don't think that reinventing the wheel is exactly the right approach here. I think that the blockchain parts that can be adopted onto these sectors should complement the current laws, but also allow for flexibility. Another example would be gambling, for example, which is part of 12% of Malta's GDP. So looking at that sector and understanding how blockchain applies to that sector in different parts of that sector, but not necessarily going and changing laws that we've had for years and years. So in this sense, I would like to refer to Nick Szabos. In his paper in 1996, he actually comments on this fact, saying that the success of common law of contract combined with its high cost of replacing it makes it worthwhile to preserve and make use of these principles where appropriate. And if we look at a lot of the crypto laws that we're seeing being articulated or proposed today, we would see that it's a very close interpretation of the actual traditional, let's call them that, laws, but it's been adopted to counter for new parts of the legal implications that cryptocurrency and DLT bring upon them. So in this sense, I would ask you to think of the operational functions of a crypto exchange versus a forex exchange, and then try and envision how a regulator would look at that and how your consumers look at that, and then say, okay, what is the outlying differentiator factors that apply to the DLT technology in that framework? So being a pragmatic philosopher that I am, I'm one to ask a lot of questions. And I think that this is something that many of us need to continue doing, especially when it applies to, especially in the context of virtual currencies and DLT. And drawing onto regulation and innovation, one question that I would highlight is, why would a government want to regulate blockchain and virtual currencies? And why has there been so much resistance to technology? I think that I'm not the one to sit here and answer these questions, but I do tend to think about them a lot. One of the questions that I have thought a little bit about, but haven't completely formulated a full kind of prospectus, is the question of AML. Why is AML so important? And as I started to dig into this question a little bit, one of the papers that I came across was this one here by Fairfield in 1994, believe it or not. And he defines Bitcoin and he defines blockchain technology, but he also specifies this point about online payments. So as we've moved away from cash and we've moved into a more online nature of transactions, we realize that actually an online payment is not instantaneous. That's blockchain, that's Bitcoin. But the online payment protocol or system that we sit on today is actually a chain of promises to pay. And in that respect, knowing each person and party in that process is very important. But what about if you don't need to know where the payment's being traced from or to, because we're no longer focusing on the promise to pay. We're actually transacting the currency, let's call it that for a better word, to and from different positions or different persons. So I think that could be a very interesting observation, and I really want to explore why AML is important in more detail. But right now, for purpose of this presentation, I'm just going to continue with some more questions. For example, why do we need GDPR? This is probably going to have like a couple of hundred people screaming at me by questioning this, but given that it's such an integral part of the European Union, but I do question, why do we need it? What is there? What is it protecting? Is it protecting the consumer? And then I jump on to here, the consumer protection law, and why does it apply? Where does it apply? And that jumps me into who is accountable. I think we all have heard this one, don't touch the hot stove. When we're kids, we're told, that's hot, don't touch it. I'm one of those stupid people who have lost a private key, even though everybody and every piece of literature that I had read before starting the whole process, my cryptocurrency journey, knew that I should probably keep a good hold of my private key, but I still lost it. And this is a story of many. So who would be accountable in this case other than myself? But I don't think we all look at it in this perspective. I think that a lot of us have become used to being able to point a finger. And I think that this is very much derived from the amount of protection that the current banking system has put in place. And I'll give you the example of eBay and PayPal. So when you purchase something on eBay and you use PayPal as your payment gateway, PayPal will cover any loss of funds or fraudulent kind of activity up to an X amount of X. Or you will see these kind of certified sellers, and that's part of the protection connection there. So we kind of feel a sense of comfort as a consumer to transact in that manner, because there's no hot stove situation. And that's a little bit concerning, because I think that essentially we do, as consumers and as humans, need to be more accountable for ourselves. Again, a little bit philosophical, but bear with me. So once again, blockchain brings humans into a position where we are held much more to our own account. However, this is scary to the general public, and I think that this is one of the counter problems of mass adoption when we talk about, blockchain technology. We're very spoiled, but we also pay the price, right? What price do we pay? Is it inflation? What about recession, global economic crisis, hidden charges? What transparency does our bank give us, in like as a sacrifice for the accountability on our own account? So then we turn to the other side of the coin, right? Or like the accountable provider. And a great example of this would be very recent, actually, in the crypto space, where Quadriga CX founder dies. He's holding the keys on what most would consider a very secure way, right? Cold storage. But clearly there was no governance going on there. And this guy passes away, and 150 million worth of crypto, of customers' crypto, your crypto, my crypto, is lost. Who's accountable? Is it me for trusting that person? Or is it the provider for not having backup, to counter for such an incident? And I think that this is an important part to kind of weigh out where regulation kind of needs to come in, and where regulation sits, especially in cases like this. And if we draw back to the example of a current Forex exchange versus a crypto exchange, then we could look at the way a current Forex exchange has to kind of provide accountability for these type of scenarios. So I think it's important here to kind of look at the classification of the business. Do we take a perspective of the blockchain? Do we take a perspective of the virtual currency? Do we take a consumer or a provider perspective? I think, once again, more questions. How would regulation help here? Is this a service at the end of the day? I guess he's charging some kind of commission, right? So it kind of qualifies as a service. Would the founder have been considered fit and proper to run this business had he gone through all the due diligence processes that the normal, Forex exchange would have to go through? And what would have limited this innovation? Is it an innovation? Is a crypto exchange innovation, or is it the innovation within the business model that is an exchange, parts of it that are innovation, with regards to DLT? So if we look at the current regulation landscape, we obviously will see that Malta is the one country with actual DLT and virtual currency laws in place today. And I will say that I'm happy actually to say that the law is written with innovation in mind. It's actually stated in the law that it allows for flexibility and change with quite a nimble manner. And I will say again that the regulator does listen. Now, an important thing to highlight here is that just because a regulator, and specifically in this case Malta, is willing to listen, does not make the process easy. Obviously, it's taken in the same serious manner as opening a normal company, and operating as a normal company. And the process is quite particular. So you have to go to a VFA agent. The VFA agent has to recognize your sector. Is it financial services? Is it gaming? Is it banking? Then it will apply a fitness, an instrument fitness test. defining if you're working with a security or a utility, and then the application process starts. So it's a guided way of presenting you to the regulator, and it's a process. There's no quick and easy way to become a regulated blockchain entity, and any country promising that would be crazy, because ultimately the reputation of the jurisdiction would be crushed if somebody did something illegitimate under that regulator's position. So I don't like to hear comments about, Malta being an easy jurisdiction, because nobody's actually gone through the end-to-end process till this date. Lots of people are still in this process. So how can people comment about that? So anyway, more on this in the future, I guess. However, there is it's worth noting that there are other regulations out there, right? So there's Gibraltar, Switzerland, Singapore, and Bermuda. And obviously, I'm not an expert in those regulations, but it's important to highlight that more and more as we move into the rise of cryptocurrency and blockchain, we are seeing regulators and different jurisdictions come out of the works. And I think this is a thing that we should welcome. I think we should all be having discussions. I think that we should be influencing each other as different regulators and jurisdictions, because the more we enable and the more we share, the more opportunity there's going to be for this sector and technology. That said, another thing I will say is that I don't have answers. Most of the time, I just have a lot of questions. And this is something that I keep on having to ask myself over and over again when I think of innovation and the regulatory balance, right? So some question that comes to me sometimes with my super philosophical hat on is, should blockchain be governed at all? And then, can blockchain be self-governed? And who will write the smart contract that will govern, that will be part of the self-governing blockchain solution? Because ultimately that means that that's driven by an individual or a consortium of individuals. And that brings into question a whole array of more questions on my end. I think that, one of the misconceptions here about smart contracts is smart contracts are still written by humans into code. So ultimately, there's very little that is smart about a smart contract from its start point. How the smart contract evolves within a technological piece is quite different. And that's something that we can cover later on as well. And so more questions then about the consensus. Where does that come in? How does it work when you regulate? Like, do you regulate a DAO? Can a DAO be seen as an LTD? How do we regulate peer-to-peer activity? Because then we're all of a sudden removing the idea of the customer and the service provider, which in current laws is very much about consumer protection, and then you've got all your regulators focusing on regulating the actual entities. So many questions about this. But on a good note, there's some really exciting upcoming drafts and proposals on this. And one of those would be the draft proposal that has come out from the state of Wyoming in the US in January. And the way they're looking at things is that compliance, AML, identification could be seamlessly integrated with the technology at hand. So it seems like the way they're looking at the position is that, look, we've got this technology. Technology can actually facilitate how we regulate. So let's take a technology approach to provide regulation. It'll be very interesting to see what ends up being articulated. And if you haven't read this proposal, I highly recommend it. It's very interesting. And obviously, again, Malta, blockchain island, have issued a proposal called the Innovation Technology Foundation. And this is where the regulator is considering granting or or individuals within the community have proposed that the regulator would grant a legal personality to decentralized innovation technology arrangements. Ultimately, this would mean that a DLT protocol would be able to become a regulated entity. And this would move the liability away from the creators, the coders, the consumers. And I think it's worth saying that in some cases in blockchain, we've seen situations where when the regulator cannot go to the founder, they actually go to the consumer and they start to penalize and inflict penalties or close accounts of the actual consumer to activate or stimulate regulation around the entities. So just because you're an individual using a platform that's not regulated doesn't necessarily mean that you're safe, if that's the right word to use either. So it would be very interesting to see how this will play out as well. So if I were to sum up basically everything that I'm talking about here, I would probably say that in order to innovate, to order to invest in blockchain and DLT virtual currencies, I would take a regulatory mindset when I look at this type of industry. I would define the sector, understand the current regulations and current limitations within that sector. I would define the function, what the service provision is within that framework or within that company's operation. I would then observe the risk presented to the end user. I would look at the risk it presents to possibly me as the service provider in this case. But then I would also take a step back and I would probably prioritize the customer-centric risk over my own, given that it's the law of many, right? I would have awareness of all regulatory landscapes, and this is something that comes up a lot when I speak to companies looking to fall under some regulatory body. I tell them to be highly regulatory agnostic in the sense that it benefits you as a business owner and people as consumers to observe regulations across the board, not just in one specific regulation. To look at having corporate governance plan, so understanding parts of the business that relate to compliance and governance, things like irreversibility, things like multi-sig, third-party oracles, private key management, for example, and the processes around that can be highly important to the business and the business plan you might be presenting or looking at as if you're an investor. So therefore, be compliance conscious. And hand on heart, I can say that some of the most exciting conversations that I've had in my business career have been with compliance people, primarily because they frustrate me so much with all the no's and this is impossible. But I think that is a great exercise to stretch the innovation muscle, because with great compliance people, you can really observe how you can comply, but still remain highly creative. And obviously, I think this is a no-brainer, but I'm to this day remain highly surprised at startups and companies who do not seek professional advice in this area. So whenever thinking about blockchain or observing blockchain, be it from your own company perspective, be it from an investment perspective, there are people who have been doing this for years. There are a lot of self-proclaimed blockchain experts out there. Look for qualifications and ask a lot of questions, because ultimately this is something new. And it's not something that's born in a day, and there's a level of historical elements to the technology at hand here already. But that said, it's still evolving. So knowing your position from from a legal perspective, for example, or a technology perspective, technology due diligence, I think it just remains to be a no-brainer in my mind. Okay, so thanks for listening. This was my keynote. I really look forward to any questions or comments or thoughts. Please feel free to correct me if there's something that you feel I've said it might not be correct. I'm learning and sharing my thoughts here, so I just want to hear other people's thoughts so that we can continue to embrace the technology at hand. I'm Carla Marie Vella on LinkedIn if you're interested in contacting me in any professional context. Comments on my Twitter, please, at Carla Marie, and of course, my YouTube channel, My Blockchain Island. I'll see you very soon with more updates from around Europe, not just from My Blockchain Island. Thanks for listening, and see you soon. Bye.